Hey there, if you follow us here on our website or our YouTube channel, you know my name is Scott Talley. I am the owner broker here at 5Market Realty, where we like to do monthly market updates on our local real estate market here in Athens. If anything about the Athens area real estate market interests you, you're in the market, you're just following the market, be sure to click subscribe. You'll be notified when we have a new update video or possibly listing videos of new listings. But today we're going to focus on what we've seen through the first 7 months of 2026 and the month of July. This is our August market update. And what we have seen is we're going to talk about home sales bouncing back in July. And then after that, we're going to look at keeping current matters and talk a lot about understanding interest rates. So this is going to be a little bit longer, but we're going to try to get through it and give you all the information. If you follow us, you know that we track four main things in Clarke and Oconee County each month: the new listings, the days on market, the average home sale price, and the total amount of home sales. So what we're seeing here is the new listings were actually up year to date, a little over 8%, 1,520 new listings in those two counties. Days on market actually fell, but that fell by just a little under 2% at 1.8 because we had a strong sales number in July. And then here, the average sold price is showing up 3%, but there is kind of a trick in there. We don't have as many home sales as we used to have, but we have some home sales that are very high, over 1.5 or even $2 million. So while it is showing that the home sale price is overall up in those two counties, I think if you looked at the market overall, we're actually seeing home sale prices and asking prices come down. The total amount of homes sold year to date is 937, which is kind of flat over last year. If you recall from last month's video, we were actually behind 2025 last month or in June, and we had a good July, and that kind of helped us catch up to 2025. So if we compare just July over the last 3 years, which is what we're doing now, the new listings are up 18%. Great news for home buyers. Days on market is flat. We saw the home sale price go up about 8%. And then we saw total homes sold. This is where it's a big number. We actually sold 22% more homes in Clarke and Oconee County than we did last July, and even more than 2024, which in 2024, Clarke and Oconee County, we outperformed the national market in our local market. So we're going to come here and look at overall listings. As we got a lot of slides today, so I'm not going to spend a long amount of time here. Listings are flat. If you notice that we start to see, if you look back under my head, August of last year through December, we start to see homes go off the market and listings have a tendency to go down at the end of the year, and then they come back up as we get into the next year, January, February, March. This is something we looked at last time, and I wanted to examine it again because we did have a good July, so it improved. This is the amount of new listings that hit the market versus the total amount of sales. If you recall last month, we compared it all the way back under my head here, 2021, 84% of those listings were being gobbled up. When we did our market update last month, it was 58%. And now, because of the good July, that went from 58 to 62%. So that's an improvement because we had a lot of sales in the month of July. But I wanted to show you something to kind of demonstrate the market. This is the same, looking at the same information, but starting at 2017 and going to 2022. And the reason I wanted to show you this is we're seeing the new listings versus total sales at 62%. 2017 and 2018, it was 78 and 75%. And then in 2022, it was 81%. So this is sort of something in the market that's showing you that buyers are having more power overall, depending on the listing. Sure, some things are still getting asking price and going fast, but there's plenty of properties where sellers are making concessions and closing costs or price. And we're going to share some of that information with you now from Keeping Current Matters. And I try to get through the Clarke and Oconee information because I want to talk about something we're seeing, which is unrealistic expectations for people in the market that maybe just don't understand interest rates. But the truth is buyers can benefit from some recent seller trends, and we're going to go through that now. This is from the senior economist at Realtor.com. New listings rose 2.4% year over year in June, closing out the strongest spring since 2022. More listings are coming to market. Now, I'll move my head down here. Homeowners are listing at the fastest pace since 2022. Above my head is the years of 2018 and 2017. If you look to the far right, you can see the amount of listings has been rising since 2023. Yeah, we're not at post-COVID numbers, but we are increasing the listings. More inventory means more negotiations, means more options. Another quote here from Realtor.com, asking prices fell again at a record pace, down 2.5% year over year. That's the steepest annual drop in Realtor.com data since 2017 and the eighth straight month of declines. Again, now, while locally we're showing a small tick up in prices, it's because the amount of sales we're having a very large sale can really raise up that average number because we still have some very high-end homes that have sold in the $2 million range. And then looking here, this is median list price June of each year dating back to 2017 is under my head. And across the board, I mean, I love that price of 2017 at 279. But you see here, we hit a peak at 449 in 2022. And since 2022, that median listing price has been falling. And now it's down almost $19,000, $20,000. So the truth is, we're talking about affordability. We're talking about interest rates. The market is doing what buyers would like to see it do. And you need to understand that there's opportunities here, and the rates are not the problem. And that's sort of something we're going to talk about, is understanding the interest rate. So this is some information from the Clever Real Estate. Buyers still define a good rate as under 5%. So 63% right by my head say a good mortgage rate is below 5%. 37% of people are saying they don't consider rates good until they're back at 3%. Here's where you have to change your thinking. What happened in 2020, 21, and 22 with the interest rates, that was abnormal. That is not the normal market. That was a worldwide pandemic, and that is very unlikely to happen again. The rate climate we're in now is actually much more normal, and along with historical trends. Here's another look at this from Clever Real Estate. 4 in 10 buyers think that rates will drop below 5% this year. First of all, if that's true, that's an unrealistic viewpoint. And if they did drop below 5%, it would cause a problem because it would actually create a lot of buyers in the market, and then you'd be back into a seller's market, which is what we saw, what created the problem with prices going up so fast. But with what's happening in the rate climate, it's unrealistic to think rates are going back below 5% anytime soon. And that's what we're going to show you here. Mortgage rates are expected to remain relatively stable. This is the forecast from Fannie Mae, Mortgage Bankers Association, and Wells Fargo. And as you can see here, all three of them have it basically around 6.5 or better, which traditionally is not a very high interest rate. Now, I understand prices are high, but 6% in the history of interest rates is not a high interest rate. It just feels high when you had a 3% interest rate from 2021. Now, what you need to know, why rates won't be going significantly lower anytime, and what people can do to make home ownership more affordable. That's really a conversation with your lender and seeing what options are there for you. But this is a look at the average spread. We've talked about this so many times. If you follow this, we talk about the fact that people think about the Fed funds rate with mortgage rates. It's actually the 10-year Treasury rate, which is the green line here. That is correlated much more to the mortgage rate. The average spread between the 10-year Treasury and the 30-year fixed mortgage rate has averaged 1.76. This is going back to 1971. So basically, if you think of it this way, the 10-year Treasury, where that is, add 1.7 on top of it, and that's usually your mortgage rate. And I want to show you historically that why we don't think these rates are going to be very volatile, going down or up. How could they go lower? The 10-year Treasury yield would have to go lower, or the spread between the 10-year and the mortgage rate would have to go down as well. So let's just look at this here. One of the things with the 10-year Treasury is inflation. It's a tool used to kind of help fight inflation. And the forecast for inflation is to kind of trend from just below 3%, as you can see here in 2026, down to about 2%. That's really not the inflation they want. They'd like it to be below 2%. So that doesn't indicate that there's going to be any reason to really drastically reduce that 10-year Treasury. This is also something else to look at. We've covered this before. The spread has narrowed. So remember when I talked about the spread, this is demonstrating to you the green being the 10-year, the blue being the mortgage rate. Now, in 2023, that spread was very high. It was 3.19, and you can see around my head, the rates got above 7%. Since that time, that range, that spread between the 10-year and the 30-year has shrunk to 1.88. Now, 1.88 is still above the average, but it's actually better than it was in 2023. They've improved that for us. That's why rates are in the sixes and not at 7.8 or even 8%. And, the 10-year Treasury and the mortgage rate, that's really what we're talking about. And if you look back to that spread of 3.19, that would give you a rate, if we were basing that on mid-2023 over here, that would be almost 8%. Today, it's got the rates around mid-sixes. And if we went to 1.76, which is the historical one, I know I'm talking a lot of numbers here, but that would make it 4.67. So, or 6.3, excuse me. So what I'm trying to demonstrate to you here, if you're thinking about, and you have to buy and you're waiting for something to change in the interest rate climate, it's going to be a long wait. I mean, nobody can predict the future, but it doesn't seem that there's anything to indicate that rates are going to drop below 5% anytime soon. And that's a reality of the economy right now. And we want to make sure you understand that. Now, Um, this this slide here goes through a lot of information about basically the chances of the rates going down or being lower than 3.5% is only about 7%. So there's so much information here. I'm actually going to move on from it because we're 10 minutes long. But this is another thing to look at. Rates below 5% are very rare, much less rates at 2 or 3%. So this is dating back to 1971, 30-year fixed mortgage rate. Look, over here, it's almost 19% in 1983. And you can see historically normal rates, 60% of the time, that's the range we're in, which is about 5 to 7%, which are the historically normal rates. And that's the climate we're in. This green line from below 5%, that was a time that rates for various reasons were kind of held very low. If that happens again, probably something else going on in the world we don't want to see. Lastly, we're going to finish with the executive summary. Thank you for sticking with me this long. That was a lot of numbers to go through, but I felt like what we're seeing and what we're hearing from our mortgage lenders, it was time to explain to you, if you're in the market for thinking mortgage rates aren't really going to be coming down. Don't pay attention to that Fed funds rate. Watch the 10-year Treasury. Overall, there's good news, though. There's good news for sellers and buyers because we had a lot of sales in July. New listings were up 8.3% to 1,520. And we also saw sales rebounding up just slightly over last year. But we had such a strong July, we caught up at 2025. Prices are still rising, technically, when you put the numbers all together. But remember what I said. When we have such a small sample size, if you only got 100 sales or less than 200, and some of them are so high, they drag up that number. I really think the market we're in is actually flat prices or slightly declining list prices, as we demonstrated to you with the Keeping Current Matters. Timing on market is easing as well. And the bottom line is that with only 62% right here, if we're only seeing 62% of sales versus new listings, the market is currently favoring buyers in most cases. So if you are in the market, know that. Seller, if you are on the market and listing your house, understand that sellers are outnumbering buyers right now. And that is a correcting market, a balancing market. And that's exactly what we hope to see in real economics. So thank you for sticking with me for such a long time. If you have interest in real estate or need help, this is our contact information. We're located right here in Athens, info@5M Realty. There's our number below. We have 20 plus agents that work here in the Athens market. We'd be happy to help you with whatever your real estate need is. Again, thank you. 12 and a half minutes. This was a long one. Have a stay cool. It's very hot here in Georgia right now, here in August. And I guess next month we'll be looking to some Georgia football. Have a great one.